Well, I'm gonna have to change that music if I'm recording. YouTube ain't gonna have it. All right, let's get started. Let's get started. Now we'll change up that music. Change it real quick. Uh-oh. We'll change it real quick. We'll get some background music. Guys, amazing day. We are getting started. Let me know about my sound, please, because my mic's still playing silly buggers. I'm trying to reset it, something like that. They said you can reset my mic. I can't just throw it out the window. It's on leg. So let's just let me know how my sound is. My volume's okay. We'll change up to over here.
It sounds cool, bro.
I sound all right, yeah? Okay, that's good.
Yeah.
I'm just using my laptop mic at the moment, so hopefully that's okay. All right, so we're looking at GU and EU, all right? Let's turn this down a bit. We are looking at GU and EU, all right? We are looking at Dixie as our base, understanding and looking at what's happening in Dixie, and I'm going to zoom out, and we're going to do a little overview, top-down analysis. Guys, I'm going to let you know today, the landscape today is looking like a absolute minefield. Right about 9 o'clock. So in an hour and leading up to that hour, we might see some volatility coming into the markets. We might, I believe we probably will, because it's Monday and you know how it goes. See some volatility jumping into the markets. At the moment, we are looking at our Dixie, and I'm going to zoom all the way out and we're going to analyze it from top down. All right. Top down meaning we are going to zoom all the way out and get a little picture of what's going on, all right? So I'm going to give you guys more screen, and we're going to have a little look at it, see what's happening, okay? Now, just down. Now, you can see here, this is the dollar index, all right? This is the dollar index. This is the dollar, okay? And overall, this is me zooming all the way out. I'm on a weekly chart, meaning every single candle is a week in time, okay? Every single candle that you see is an entire week in time. So we are going all the way back here to 2007, all right? Now, 2007 information is not going to necessarily help us today in 2025. However, what this market is showing me is it's giving me some facts, okay? In a world of, I think this is gonna happen, I think that's gonna happen, this is giving me facts. And the facts of the matter is that the dollar has been gaining strength since, from this chart that we can see here, at least 2007. From at least 2007, the dollar has been making higher highs and higher lows and higher highs and higher lows and higher highs and higher lows. So right now, in that journey, based upon that journey, the dollar is cheap, okay? Based upon that journey that it's been making since 2007, yeah, the dollar is cheap, all right? Now, when anything is cheap, we discussed this, doesn't matter what it is, there's going to be a lot of pressure in that market of people wanting to come and buy something that is cheap. Yeah, there's going to be a lot of pressure, people saying, oh, this is cheap, let's buy one of those. You didn't even need one of those, all right? You didn't need a fan that flashes on and off and also heats your food, but you thought it was so cheap, I might as well get one, all right? So the dollar is quite cheap at the moment, all right? And I am actually hoping on whoever it may be, Donald Trump or the powers that be, to make, America great again, for the dollar to start gaining some strength. I want the dollar to start gaining some strength because I trade EU and GU predominantly. And I believe EU and GU are in a real premium, and I want them to tank. Yeah, I want them to go to hell, okay? Because I am not an investor in the Great British Pound. I'm not an investor in that. I'm a trader. I take advantage of the volatility of the markets moving up and down, okay? And I'd like to see the EU and GU coming down. Now, why would I like to see that? Because similar to pound, let's have a quick glimpse here, guys, because on my other screens, I can't see what's going on with them. I don't want to miss out on my Monday volatility. All right, look. So look for here, for example, yeah? We've seen this market. This is the EU. I'm jumping in a little bit, okay? This is our EU. We've seen our EU take Asian session liquidity early, did it in Frankfurt. When it does it in Frankfurt, does it before London opens, I don't really care about it. It means that this area here hasn't got that much strength. Yeah, it means it's not that stronger area, all right, in regards to where there are a lot of unfilled sell orders. Yeah, because the market already pushed this red box is Asia, all right, for the people that are new to the session or people over maybe that red box there is Asia. Let's put in some labels, which I don't normally have on my screen because it just takes up eye space, but this is Asia. And we see Asia highs were taken, okay, early. This was 6 o'clock. And then the market had a reaction from this. I actually sold this all the way down to where? Can somebody tell me where I sold this down to? All right, even though you weren't there, even though you don't know what I did, but based upon strategy and your own knowledge, does anybody know where a point of interest was, where I sold this from? I was up early, all right? Does anybody know where a point of interest where I sold it to? Have a look. Where does it look like I sold it to?
50% of the range.
That's what I sold it to. I sold it to 50% of the Asian session range. Have a look. This is Asia from here to here. And where did the market go to? Oops. 50% of the Asian session range. Yeah. And then this market started pushing up. And I was in the buy, but because I was on my jog, I just made it a little risk-free. And one of these retracements stopped me out early before we got up here to this mountaintop. Okay. Which is cool. I'm all right with that. It's no issues. Because ultimately, I actually believe that this market is going to continue pushing up. Even though we've had a bit of a reaction here, I'm wondering, let's have a look at this. Well, maybe not. I'm watching it. I'm going to read and react to what this market does. I did identify this area of liquidity here as a brighter area of liquidity. For as you know, every single red line you see on my screen are points of interest. Okay, I'm going to get rid of this Fibonacci showing the 50%. Every single red line on my screen is a point of interest, i.e. more times out of 10, an area of liquidity. Now, what is liquidity? Liquidity is a pool of money, all right? They normally pool around session highs and session lows, daily highs, daily lows, okay? Or areas of imbalance, okay? Areas of inefficiency. So have a look at these markets. These markets have been galloping bullish. Okay, this is on our daily time frame. We can see here Friday, we had not an outside candle, but on Thursday, we had a big outside green candle. And we're expecting to see the next candle's another outside green candle, but we didn't, meaning the candle didn't close outside of the range of the previous candle. Now let's zoom all the way out of EU as we were going to do earlier. All right, I believe EU and GU are in a real premium. Yeah, just think about premium as expensive. Okay. If we look here and I draw some lines, okay, drawing some lines here. Now, these lines that I draw are not the be all and end all. They're lines on my screen on my laptop whilst I'm sitting in my office. Yeah, they're not lines that are telling the market to go and touch those lines and then run away from. They're just a guide for me and my eyes to see how the market has been doing this. This is a guide for my eye to show me how the market has been doing this. Yeah. So therefore, right now, just like our dollar is in a real discount, in my humble opinion, GU and EU are in a real premium. Meaning someone's going, right, that's mad expensive. I want to sell those. I've got a whole box of those in the shed. I'm selling them because they're very, very expensive. That's, in my opinion, where the psychological pressure is in the markets. Okay. Also, we understand that the markets do something called AMD. What am I talking about? Somebody tell me what I'm talking about. AMD.
Accumulate, manipulates, and then distributes.
There you go. All right. So they accumulate, right? They manipulate, and then they distribute. In my opinion, the market for a long time was going sideways here at the top of the range, accumulating orders. Okay. And then the market manipulated to the downside, also capturing liquidity. Okay. And then the market distributed higher, making its run in this direction. Accumulation, manipulation, and distribution. Okay. Now, in my opinion, that distribution could have finished now. All right. We're up in a real premium, but I just can't just guess this. I've got to look for other confluences, other clues, other things that may dictate that happening. All right. So I not only look here, on the basis I can see how this market's been pushing up here. I can drop my time frame. This is the daily now. I can see this daily energy of the market making higher highs and higher lows. Okay. I can not only see that information, okay, and go, okay, well, we can see the market's been pushing up quite aggressively. I can go to my smaller time frame, have a look. Uncle drew a little yellow box here already, all right, of this market, in my opinion, kind of going sideways in here. Hence the reason why I identified this little level up here as a particularly interesting level, okay, which is above this little yellow box, all right. But I can also, all right, here we can see here on a smaller level, we can see our Asian session, like I was saying earlier, the Asian session has already taken, meaning I don't really care about it too much. And look, that clockwork, it violated those highs again, all right? And as soon as London kicked in, we are seeing a little reaction right now, okay? We are seeing a little reaction right now. However, I'm still a bit concerned about this level over here. I'm concerned about the market pushing up. I'm concerned about the market pushing up into here. All right, we have seen a reaction on a smaller time frame. If I drop down to my 5 minute, if I drop down to my 1, we can see, look, and engulfing, a big red engulfing candlestick pattern on the 5 minute time frame here. Yes, we can see it. And even if you wanted to go there, it's actually a manipulation M, boom, 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 over here. I am concerned about this orange level here though. However, I am a day trader. 1 second, guys. Oops. I am concerned about this level over here, okay? Now, what am I gonna do right now? I'm also gonna look at my dollar index because the dollar drives anything that happens in our GU and E, okay? The dollar drives whatever happens in our GU and EU. And if I drop my time frame down here, I am very aware that I also drew a little box of accumulation in our dollar index, even though it's right here in a discount, so I'm expecting it to go up, all right? And that dollar has just taken or wicked below this little range in here. Now, I like to see some nice closures. I want to see a nice manipulation W here. On a 15 minute, we're not getting it. It's just a wick. On a 5 minute, it's just a wick. Another bullish engulfing candlestick pattern. Similar or identical to our EU, right? Look, identical. But one's got pushing bullish, one's pushing up. Why? Because GU's on one side. So Great British Pound's on one side and US dollar's on the other side. So this US dollar starts to gain strength and go in this direction after taking, and go in this direction after taking liquidity from below here, then we're expecting our EU and our GU to start coming down. Now, right now, though I'm interested, and I'm very particularly interested in this area here, if I get a closure below this level, I will take a jab for the sell. When I say jab, meaning I'm not going in full risk, all right? Why? Because the market has made a manipulation M here on a 5 minute time frame, which is quite big and strong. And maybe it doesn't want to go up to this level. Just because I've said that this is a great level and it's not a point of interest, maybe it doesn't. It's Monday. Now, a lot of traders don't even trade Mondays. You hear me say this all the time. I'm saying it for the camera because we're recording, all right? A lot of traders don't trade Mondays because sometimes the markets are just playing catch up to what's been happening over the weekend. You see, believe it or not, the world has still been turning, yeah, over the weekend. Things have still been going on. Countries still getting bombed. President's still saying nonsense on Instagram and Twitter and X, yeah? Like, things have still been happening. And the Forex market, though it closed on Friday, on Monday sometimes what you see is the markets playing catch up to what's been happening in the world. And that can throw our technical analysis straight out the window. All right, fundamentals will throw your technical analysis out the window because the fundamentals of what's actually happening in the world. If when the towers were hit, quote unquote, supposedly hit by aircraft in 9/11, there is an immediate knee-jerk reaction to that news, to that event. People start panicking. People start buying, selling, going crazy to that event. Doesn't matter whether I had my lines here, my technical analysis for weeks or months on end. All right. And I was like, oh, yeah, this is the best zone ever, blah, 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 blah. When that news event happens, the markets shift. Yeah, meaning that's where the strength is. That's where the power is. That's the real boss, is the fundamentals. However, it's quite difficult just to trade fundamentals as a day trader. As a day trader, you're trying to be very sensitive to movements in the market and get in and out of the market and steal some money. That's what you're trying to do. So therefore, we take these things into consideration at the back of our mind. However, we're looking for the things that we have seen over and over and over again. And our strategy is a combination of repetitive things that we've seen and us, getting that reinforcement that when we see this normally happens. Does it happen all the time? No. But more times out of 10, it does happen. So if we're smart, if we know how to manage our risk, we can lose our way to success based upon our strategies, because our strategy is in our favor. It gives us an edge. Yeah. So that edge just means you just need to keep flicking the coin or keep rolling the dice. If you shaved off one side of that dice so that there was a higher probability of it rolling on a 6 than any other number, and you placed a bet that I'm going to roll more 6s than you over 100 rolls, more than likely you're going to win that bet because there's an edge in your favor. Once everything else is equal and you're rolling the dice equal and et cetera, you should roll more 6s if you've got an edge. And that's what trading is. Trading isn't that we're going to get a strategy and every time you hit the button, it's going to win. Even when you shave off one side of the dice, some lunatic rolls the dice and he just rolls it in a mad way and it lands on a 1. Yeah, it happens. So that's why risk management, as well as our edge, is how we trade profitably. It's how Jason's funded, it's how Jigs is funded, it's how everyone's been funded, it's how you see me taking profits out of the markets by our edge. Our edge is centered around price action and market structure and understanding what fuels the markets. So have a look here. I've stood here and I've said, look, if this closes below here, I'm going to take a jab. I already know how big my jab's going to be. My jab's going to be here aggressively for 8 pips or 9 pips plus my spread. Above this high is the safer place, which is about 20 pips. That's my decision, whether I'm aggressive or I'm a safe trader, or I'm aggressive or a lower risk trader, a higher risk trader, lower risk trader. How do I know? How do I work out my lot size? Because I've got my calculator. I know my lot sizes off by heart in my head because I know how to calculate it. But if you don't, you have your lot size calculator. You have the amount of money that you have in an account, whether it's like 10 grand, 100 grand, whatever maybe, and then you put in your lot sizes in here and you hit calculate and you understand, okay, if I've got a $10,000 account and I'm taking 5% worth of risk, which you won't be, you'll be taking 1% max, all right? To say you're going to lose $100 if you're in your live account, then you know that your lot size is 1. If you only want to lose $10, you know that your lot size is 0.1. And remember, whenever you take a trade, it's about what you want to lose, what you're willing, not saying want, let me change my language. You don't want to lose anything, but what you're willing to lose. And that is completely different to what you want. Every time you leave the house, you are willing to lose a certain amount of money. You may not look at life like this, but I do. If I leave the house with my 2 kids, I know I have to be willing to lose £100 minimum. Why? Because I've got to put petrol. Well, I don't have to put petrol, my electric car at the moment, all right? But I've got to buy them food, all right? So anyway, we're going to go buy them food. We're going to sit down and buy them food. I don't know. This is right off 30 quid, 40 quid, all right? They want something else. Okay, it's a hot day. They want ice lollies. We're going to find something to do. Okay, let's go to the cinema. Let's go to this little, jump place. So before you know it, I've burnt 100 quid. So therefore, if I don't have 100 quid, if times are hard, yeah, if I've got things to do, we're going to the park or we're staying in our house and we're playing with the bricks that are in the corner. I'm not leaving my house. So I'm not willing to lose that money. But when people come to the markets, they don't take the same attitude. The market's like, oh yeah, well, I've got my $500 account. Oh, this is like a great trade. Let me put up £100. You're willing to lose 20% of your money. 20% of everything you own in the markets, you're willing to lose on the next trade. Is that what you're saying to me? That doesn't sound good to me. Yeah? Yeah, but I might win. And if it goes up, you might win, but you might lose. Okay? Now, until you're in a position whereby you've got a big enough account, yeah, that it doesn't mean anything to you to take larger trades or to lose a certain amount of money. You have to understand this trading thing is about risk management. And it filters down to life. Do you understand? About managing your risk. Yeah, someone says something to you straight away. Your brain as a trader is calculating the risk. It's not calculating the that could be really good. Yeah, yeah. If I just remortgage the house, yeah. No, that's not how your brain's working. As a trader, your brain's going, what's the risk? Look a bit high risk, bro. A bit of a high risk business idea that you got going on there. I mean, yeah, it might go good, but I mean, it might go really bad. And you're asking me for how much? Nah, it's too much, bro. It's too high a risk. That's how your insurance company works you out. That's how your life insurance works you out. That's how your everything, your job, your everything. They look at you and they go, what's the risk? What's the risk of this not going well? You want to borrow some money to buy a house, they got, your bridging company. You want to buy some money to go and bridge the money and get the money so you can go. They look at you like, what's the worst case scenario? I will borrow you the money based upon the worst case scenario. 65% of what that house is going to be worth when it's done. That's what I'll do. They're covering their risk. They don't care about you. I don't care about whether you can develop the house and you're going to build this plot of land and you're going to do this. I don't care. Maybe you're not. Maybe you're mad. Maybe you don't know what you're doing. They're going to borrow you the money based upon the worst case scenario of money that they could potentially lose. And then they're even not going to lose because they're going to make sure that they secure the house as collateral. All right. You have to do the same in trading. Any other person that's telling you different is lying to you. Yeah, take my signals, this is going to happen, or we can do this and that's going to happen. They're lying to you. What's going to happen is that you don't know what's going to happen. If they knew what was going to happen, they'd be quadbillionaires. Yeah? Quadbillionaire. Go and Google that number. They'll be making money out of their nostrils if they knew what was happening in the markets. If I had a time machine and I could go forward in time and I knew what was going to happen tomorrow or today in the markets, let me tell you something for free. I would put everything on it. Everything. Because I know what's going to happen. Even then, when I've been to the future, a little bit of my brain would be of, what if something's changed? What if I change the future? We've all seen Back to the Future. Don't bump into yourself. Don't do this. Try not to change it. Mate, what if I change the future by just being here? And actually, the markets don't just sell off today. Even then, I'd be a little bit hesitant to put everything on it. But yet, when people are trading, they're over leveraging. All right. So the reason why I've ranted on about that so much, because I'm telling you, that is 75% of this trade, of mastering this trading term, is mastering your risk. Like right now, we've been sitting here and I've been talking, and some people say, he's talking so much, but we're not doing any trading because there's nothing to trade. We're waiting. I said I'm waiting to see if this market here is going to close below here, and I might take a jab. But I'm concerned about this level up here. The rest of it, guys, I'm going to get rid of that text. Sending me mad. All right. The rest of it is about patience. It's about mastering your emotions. It's about sitting there twiddling your thumbs. It's about placing your alerts so that if you go to the toilet, if you're not looking, if you're not paying attention, that your alerts, you got little AIs, your little robots in the market, that they can stand around like good soldiers in the market, good little bots in the market, and they can tell you when the market breaks this level. Look, when I do that, this little alert that I put in here is going to tell me if the market breaks this level. I can go about my business. I can go down to the kitchen, go make myself something to eat, or wherever you are right now, you can go and do it. But when this starts to ring, it's going to tell me whether or not this market's breaking down here, and vice versa. If this market comes up here, this little alert over here is going to tell me when this market comes up here, when it's going for my point of interest. I can go about my business. I can go look at another pair now, which I'm going to go and do. I'm going to look at gold. Let's look at gold. XAUUSD. All right. Now, as we know, in the next 37 minutes, it's active. All right. In the next 37 minutes, this market gets active. Active with CPI, active with all types of stuff. Now, we have to make the assumption that there's going to be a level of volatility that enters the market, okay, around this time. Now, sometimes, and no, I'm going to say sometimes, a lot of times, we see red folder news hit, yeah, and we don't really see the volatility that we was all building up to. It's an anticlimax. Now, why that is, does anybody know why that is sometimes?
Yeah, it's priced in already.
Good morning,
Grand
Alex.
Rising or Grand Rising.
Yeah, Grand Rising. Yeah, so look, correct. It's priced in. Now, what do we mean by it's priced in? This is what we mean. We mean ultimately it's like this. have you ever been on a roller coaster? All right. So if you've ever been on a roller coaster, it's been a little while for me. But when I was younger, I was one of them kids. I wanted to go on every single roller coaster, the biggest roller coasters. Now, I don't know. My priorities have changed. I've seen too many Instagram memes where people been losing legs, and someone forgot to screw in this nut and them thing there on roller coasters, and I'm not on it. Yeah, I got things to do. All right. But if you're on a roller coaster, you can see ahead of time when the roller coaster is going, there's a big drop coming. Do you understand what I'm saying? So what you do, any sane person, what they do is you brace yourself for that drop because you know it's coming. So in these markets, when we see in scheduled news, you need to understand what's going on in the world. This isn't just like, text on a screen. These are events. These are things, actual scheduled news that is happening in the world. And institutions, the real power base that moves the markets, they have whole departments of guys and girls in grey tracksuits with white socks and glasses triple glazed, that all they do is they sit and try and work out what's going to happen with CPI on 9 o'clock, at 9 o'clock today, on June the 30th. They're sitting there working out, calculating, believe, yeah, we think it's going to be this, we think it's going to be that. That's how we have this information here, where we have a consensus of what we believe the number's going to be. This isn't just numbers picked out of thin air. These are people that get paid, business analysts, data analysts, to look at the market and say, yeah, based upon X, Y, Z, what's been happening. Furthermore, there are some data points that they can actually go and see for themselves early. The same data that maybe these people are using, these analysts can get hold of that data early. So therefore, if they've got the information early because it's their job to know what the Bavaria CPI, I don't know what the Bavaria CPI is year on year. If I want to learn, I can click into here and start reading up about it. All right. And start reading up about it. Here doesn't even have too much information, but we can start going in here and Googling it and seeing what's going on and going in historically and seeing what things happen. If I wanted to, that's what I could do on every little piece of fundamental news, but it's unrealistic. It's unrealistic. Somebody knows every single thing about what these things are happening. Just know this, that this is high impact news. So we make an assumption that the markets are going to react to it. However, they may not. However, we may see certain things happening. Maybe our GU and our EU pushing in a direction. All right. Yeah. Maybe that market, maybe we see, have a look. Maybe we see that news here and then straight away, boom, that point of interest that I was really overly interested in gets taken. And we see that manipulation above this accumulation zone happening up here. Maybe, I don't know. Okay, but what I do know is as a day trader, I can read and react. I can have this little question mark you see every morning before the session starts at 8 o'clock when we've got our motivational music playing in the background, but I'm on the charts. I give you guys a window into what I'm doing. Sometimes I'll put it on this screen and you'll see me sometimes. That's my alert below here. Have a look. All right, so I said I'm going to take a jab. If this candle closes below here, I am going to take a jab. I'm still not happy about the jab. I'm not going to lie to you. I'm not over the moon about the jab, but I'm going to take a jab. As soon as that candle closes, which it has, taken a jab. Now, look, I'm letting you know for free. Do not get into a trade because I got into a trade. I got into a trade because you understand it and you want to take the trade. Now, what do I mean by that? I mean that I'm not here trying to give out fish, because if there's ever a day I decide that I don't want fish, you're going to starve. Yeah? I'm here to make sure that you guys have a fishing rod and understand why we get into trades or not. And the reason why I got into this trade isn't because we just had a closure below here and that's the be all and end all. It's because we made a manipulation 5-minute M here. All right. It's because we tapped into that M, which is the correction. It's because we came down here and closed down below this wick low, which is the continuation. It's because Dixie down here took liquidity below this level that I drew a little box with this wick here, and that wick on a 5-minute time frame made a big bullish engulfing candlestick pattern, which also was a manipulation W pattern here. Can we see it? Yeah. This is my argument. This is what I'm going to court with. And then we corrected and then we continued. And we know that the Dixie's in a real discount. If we go all the way here to our, zoom out of our weekly, we know that the Dixie's in a real discount over here. Look, This is not my opinion that it's in a discount. This is a fact. It's in a discount. Because the market was making, look, because we're making higher highs, higher lows, higher highs, higher lows, higher highs, higher low. I mean, just because I've decided to open my computer today, why not continue doing what it's been doing? Now, can this market change? Of course it can. Everything can change. The world has gone mad if you haven't noticed. Yeah. However, I've got to trade what I see. So that's the reason why I'm taking a jab. I'm not swinging from the rafters with my best hook ever seen and just swinging my arm before taking any type of jabs. Why? Because I'll fall off balance and my opponent will punch me up. I've taken a jab. Okay. Now, if that jab connects and dazes my opponent, please stick with the analogy. I'm a boxing guy. I like boxing. All right. If that jab dazes my opponent and this market starts to do what I believe it's going to go and do, yeah, as in start pushing down in this direction, as in start breaking some more minor bits of structure, as in when I zoom out to larger structure on the maybe 5-minute time frame, I start to see some breaks of structure there also. As in maybe this market might take a little correction and then continue. Well, then I can add size. Then I can start throwing my hooks, my uppercuts. And then when this market really starts to move and motor in my motion, maybe at 9 o'clock, maybe when the news starts to hit, maybe, I don't know, we start seeing some strength and speed, maybe start breaking more significant levels of structure, such as underneath here, such as underneath here. Why is that more significant? Because it's not just 1 minute structure, it's 5-minute structure, it's 15-minute structure. Yeah, it might even go to my hour, down here, be an hour structure. Also below Asian session lows, the market starts busting through there, starts doing that, then I can start adding size. I don't need to just swing my best punch straight off the bat and then what? He ducks underneath my punch and I look like an idiot in front of my missus and my mom and all my mates. No, I don't need to do that. I need to understand that this trading thing, I'm a professional trader. I understand that this is a marathon, not a sprint. I understand that I may lose trades. If I lose this trade right now, this quote unquote jab that I'm in, it doesn't mean anything. I'm not risking anything. Yeah. But what I've done is I've backed myself. I had a plan. I said my plan out loud. If this market closes below this level here, I'm going to take a jab. That's my commitment to myself. This is another thing, another life skill. If we make decisions, we make commitments to ourselves, we say that we're going to wake up in the morning and go for a jog. You got to wake up in the morning and go for a jog, or don't bother say it to yourself. Yeah? This is my plan. Now, I've made my bed. I am willing to lie on it because I'm still concerned about this level here. I can't lie to you. I'm still concerned about here. Now, maybe the market doesn't want to come here straight away. Maybe the market wants to come all the way down here, and maybe tomorrow it wants to come up in here. I don't know. That's why I'm reading and reacting to what the market does today. Because I don't know what the market wants to do. So I don't want to sit here and marry my trade. You hear a lot of traders marry the trade. They go, oh yeah, the market's coming up here to get the liquidity. And they're going to sit there like a statue because they've married that idea. Yeah? And then the market goes all the way down here for 1 billion pips. And someone's saying like, bro, you don't think you want to change that idea yet? No, it's coming up here. Okay, cool. And 3 months later, that educator on Instagram or YouTube goes, I told you the market was going to come up in here. Oh yeah. I mean, after falling for 3 months, it did come up there. Yeah, you're right. I mean, however, how did that benefit me? So I don't trade with no ego. I don't know what the markets are going to go and do. I'm all right with that. Because I've managed my risk that if this market comes up here and stops me out, the market pushes up here, does a madness, yeah? I just don't care. I don't have enough invested. The same way like I don't care if I leave the house and I've got to buy my little man a drink, a packet of crisps. I don't care. Once those packet of drinks and crisps don't go up to like £1,000 each, I don't mind. All right? I just don't care that much. Now, this is the attitude you have to take to trading. Yeah? You have to understand you've managed your risk. The rest is on God. It's nothing to do with you. I'm concerned about this. So let's imagine this from Ozark, for example. I've taken a jab like this. I've taken a jab in this market like this. Okay, cool. If this market pushes all the way up here, comes and takes my stop, stops me out, I'm cool. I'm now looking for my other idea to see what happens when the market gets over here. I'm also making sure I'm checking on my Dixie, my dollar index that's driving the markets. I'm seeing, is this market giving me any clues of what might be happening? Look, down here. Look, I drew this in here ages ago. Yeah? When the music was playing, when the session hasn't started, I put this in here ages ago, my question mark, because I identified this point of interest. This was actually probably a bit lower down here, this point of interest here. And I was like, when this market comes and takes this liquidity here, is this market going to push up from here? Well, that's a tick in the box. It has done that. It has pushed up from there. I'm still a little bit concerned that maybe this market wants to do this properly, like that. It might want to do it properly. It might want to consolidate around here for a little bit. It might say, you know what, Jay, you are right. And we're going to come from here. We're going to go up here. But you know what we're going to do for a little while? Until Tuesday or Wednesday, we're just going to do that. And then on Wednesday, we're going to do what you thought it was going to do. And then we're going to do that. I don't know if the market wants to do that. So I don't have a time machine. Yeah, but this point of interest that I had down here, and the only reason why this orange square is so big is because I zoomed in. But if you see when I was looking at it like that, look, that's where my orange square was. That's where we've seen a reaction to this morning. Okay, I can't count my chickens. I can't say that this market is going to go to space right now. I'd like it to, because if the dollar index gains strength in this direction, it means our GU and our EU, not 100%, because remember, there's still the other side of the pair. Maybe EU gets very, very strong. Maybe this EU news here makes the markets get extremely strong at the same time as US dollars gaining strength, meaning that it will balance itself out. Think about it like on a scale. If I put 10 pounds on one side of the scale and I put another 10 pounds on another side of the scale, well, it doesn't go anywhere, does it? Yeah? But if I put 10 pounds on that dollar side of the scale, bearing in mind G, the Great British Pound, is on one side, and U is on the other side. If I put 10 pounds over here of strength or weight, and I only put 3 pounds over here of strength or weight, well, GU's going down. Okay? And that's why sometimes, even when we see the dollar doing certain things, and we might not see a market doing it, it's because the other side, for whatever reason, has gained some strength. Yeah, remember, the world's interconnected. Like, we might try and think to ourselves, that's why the whole Brexit, let's leave EU, that's so stupid. It doesn't make sense. The world's connected by the hip. Everything's connected to everything. You know, if you lose a lung, you're not going to be functioning right. You might be able to function, but not like you used to be able to. Try and go for that swim. Try and go for that jog. You can't. Everything's connected to everything. You know, that's why we do ultimately have to get along, because we live on the same rock. So when you see certain things happen in the market, they're connected to other things. And we use that as traders to just try and give us a little bit more information. Hence the reason why I trade GU and EU. And I trade other things, but GU and EU to me is quite an easy touch, especially in London session, because I get to look at both of them. Have a look here. Let me refresh this. I get to look at EU and GU. Now, they're cousins, meaning that they do the same thing. They're those cousins that turn up wearing the same outfit. All right? They turn up wearing the same outfit. However, if I see, for whatever reason, that one of the cousins, have a look, like I can do it now, have a look. If I see that one of the cousins turned up in a pink, tracksuit, and the other one of the cousins turned up in a blue tracksuit, I start thinking to myself, these cousins had an argument. Something's going on. Because they normally wear the same stuff. This is called divergence. Okay? This is called divergence. Just like we kind of got it here to here. All right, now divergence, just like anything in the markets, is not a foregone conclusion. Okay, it's just an added bit of confluence. Have a look here. This here was bearish divergence because it was above price. Look, the market was making higher highs here, and the market was making lower highs here. This is me looking at those two cousins going, yo, what's going on? I thought you two are connected at the hip. Ah, no, she's an idiot, man. She kissed my boyfriend. I'm not wearing what she's wearing. Okay, I get it. That's bearish divergence is above price. And from there, we saw the market fall. Okay. But now this market pushed down below some structure here. And now we're getting, there's some actual bullish divergence happening. Okay. As we see the markets making some higher lows here, but making lower lows here. Now that may mean nothing, but it may also mean that my concerns about that market, that EUGU, that maybe we do get this little impulse that's going to push up in a minute and go and take this liquidity level over here. Yeah. So that bit of divergence there, even though it's on a 5-minute time, which is small time frame, is giving me more concern. If I zoom out, remember the larger you get in time frames, the more power they have. So if I'm looking at 1-minute divergence, well, 5-minute divergence is going to override that. 15-minute divergence is going to overwrite 1-minute divergence. Do you understand? Yeah. So if I'm looking here, this is now the 15-minute time frame. Well, it's that bullish divergence, in my opinion, is still kicking in from here to here. I'm gonna make it a different color. And you can see similarly on the other side, the other. All right, what's going on there? What's happening? What's happening? Yeah, on the other side, we can see here on a 50-minute time frame. Similarly, from here to here is going in the opposite direction. This is a bit of a concern. All right, we've had this one already because it's pushed out. Okay, it's a bit of a concern. Overall, I'm still bearish on it, but I'm very, very concerned at the moment. Despite my jab that I've taken here, I'm still concerned about this orange level here. And that concern, in my opinion, might show its ugly head in the next 20 minutes. Yeah, that concern might be volatility that comes and does that in the next 20 minutes. So what I'm going to do, if I'm still profitable by that time, if the market doesn't stop me out from my jab, I'm going to protect myself before the news hits. Okay, just like a boxer would. I'm in the corner, my back's up against the ropes. If I'm clever, I'm going to protect myself. Because it doesn't matter who I am. If this guy catches me flush on my jaw, I'm going to go night-night. Yeah? I'm going to protect myself. Yeah? If I don't, if not, and this starts pushing up beforehand and takes me out for my little jab, yeah, is what it is. Remember, money's my tool. Yeah? Money's my tool, just like a carpenter uses wood. All right? Just like a seamstress uses material. When you go to her studio, there is material all over the floor. Leather, silks, expensive material. You're like, look at all these materials all over the place. What's happening? So yeah, I'm a seamstress. Sometimes I make a mistake. Sometimes I tear the material, the fabric. Sometimes the machine chews the fabric by accident. It happens. Even though I'm a professional, it happens. Same thing when you're trading. Sometimes I lose. I don't have a problem with telling people that. Sometimes I lose. Yeah? As soon as you get comfortable with that, everything becomes less pressure. Becomes, you're less hard on yourself. You're like, listen, it's what it is. It's the guys that can't handle losing are not going to do well in trading. It's the guys that can't handle losing are not going to do well in business. The guys that can't handle losing are not going to do well in any form of competition, because it's not the loss, it's how you deal with the loss. Do you go, you know what, I'm not letting this guy ever beat me again and go to the gym? Do you learn from your loss and go, okay, we was doing the business and we was paying too much for this. The next time we do the business, I've got to find a better supplier. Or do you say, no, man, it's just not possible. I can't do it. I lost, so, I'm never going to be as quick as him. That's the difference, right? It's not the fact that you lose. We're all going to lose. It's how you deal with the losses. Go and ask Michael Jordan how many times he missed his shots. Go and ask your favorite footballer how many times he didn't get scouted, or how many free kicks that he misses. Because when I see Ronaldo play and I see shots going over the crossbar all day long, Yeah, he's taken the most shots on the team. That's why he scored the most goals. He didn't score the most goals because every shot he takes, he went top corner. He's out there taking shots. So ask yourself, what shots are you taking with your life? You're moaning you ain't got enough money. You're moaning that you ain't gone on that holiday. You're moaning that the car's rattling and you wish you had a shiny car. But ask yourself, how many shots are you taking with your life? If you're not taking any, how are you going to score? It's impossible, right? I think it's impossible. I ain't seen nobody score without taking a shot. Maybe, in fact, I'm lying. Maybe you're fluky. Maybe there's an own goal. Maybe you come into some money. Maybe, grandma passes away. Maybe you hit the lottery. But let me tell you something for free. You will not keep it. You will not know how to grow it. You will not be fulfilled in it. How many people win the lottery and you hear them go broke? People win the lottery and then they lose all their money. They just won 8.2 million on the national lottery. 3 years later, they're back at Argos. No disrespect for anyone working at Argos. Why? Because they don't know how to make money. They don't know how to manage money. They don't know how to grow money. So how can I just give them money? What are they going to do with it? I'm going to give a guy who doesn't have a clue what to do with a chainsaw and say, yeah, just clear this area of forest for me. He's going to cut off his arms. He's going to lose a leg. He's going to cut a tree. He's going to fall in a house. He doesn't know what he's doing. So being here as traders, managing your risk, looking at the markets is training those muscles. Right now, we're looking at gold. I'm looking at gold and I can see that gold started in the London session. This is the London session here, that yellow box. Okay. Now I can say that Asian session was here and gold melted through that Asian session. So straight away, let me wipe my charts. Straight away, I start looking for other points of interest. This is a point of interest, a previous London session. This was a point of interest, this Asian session here, but that liquidity was taken. Now, I also need to know the bigger picture of what has gold been doing. Because ultimately, I don't want to trade against the trend. I don't want to swim against a tide. It's too much effort. I want to understand what has gold been doing. I'm not so, arrogant that I believe that just because I've opened my computer today, gold's going to start doing whatever I want it to do. I can't be like that. I've got to be like, listen, I've got to understand what this market's been doing. All right. Now, we know gold's been bullish for many reasons. Can anybody tell me one of the reasons why gold has been so bullish, for many, many years? Is there any reason why? Does anyone know any reasons why gold's been so bullish? Anybody know?
War is one factor.
And tell me about war. Why would war make gold bullish?
Because gold is a safe haven, and when there's normally war, indices go down due to uncertainties. So everyone moves their money into a safe haven, and one of them is gold.
I like that answer. All right, I'm gonna elaborate on that answer and make it a little bit more complex and give you guys some additional material to check into. It's something called the VIX. Does anybody know what the VIX is?
Yeah, it's a measure of volatility of the US 500.
Fantastic answer. All right. So volatility of the VIX is about fear. Okay. Now the US 500, if we believe that US is one of the most powerful countries of the world, which is arguable right now, all right, but therefore the companies that make them powerful, are in a position whereby we can look at their performance, and their performance can give us some information. And that fear and that greed about, what's going on with regards to those companies can give us some additional confluences. Now, gold, going back to gold, has been seen as a safe haven asset, meaning that when the world's on fire, people go, bro, I'm not too sure about this crypto stuff that you're telling me about. I'll tell you what I'm going to do. I'm going to take my money and I'm going to buy a big gold chain. Because let me tell you something for free. In all of my time, I've seen people have a desire for gold chains. I've never seen people start saying, you know what, forget about gold chains and everyone's just wearing plastic chains. Everyone's just wearing wooden chains. I haven't seen it yet. But From if you want to go back to the times of, you know, all the way back through history, gold has been seen for whatever reason as a precious metal. It has utility. It's a superconductor. Yeah, it can be used as tools, as weapons, as all types of stuff. And nothing's changed. So when the world starts being on fire, we're in war, we're in COVID, we're in this, we're in that, blah, blah, blah. Gold, people put their money in gold. That's the reason why you've seen gold going parabolic. Gold has been only doing this. And the question we got to ask ourselves is this: when does this end? What makes this end? Is there any overriding factors that are going to make people go, oh, thank God we're out of the fire. Everything's going good right now. We're in safe times. I hope so. But I can't see it. It's hard to see. Now, does that mean that we just buy gold? Long-term, possibly. If you're a long-term investor, possibly. Your gold chain that your, grandma bought you when you was 8 is worth more now than it is when she bought it. Yeah? But that doesn't mean that today we could just buy gold, because we understand that these markets move in waves. Even if gold wants to go up, it's going to go down. So we can't just say, oh, yeah, I'm going to buy gold up here, because we don't have a big enough account for this gold to go backwards against us all the way down to here. And even if you did have a big enough account, you would have a heart attack watching your 100 grand go down to 30 quid. It's not even going to be that, because you'll get a margin call before it gets down to 30 quid. And then come back up here to 105 grand. Like, you're going to, jump off a cliff before that happens. You're going to be so stressed. The anxiety is going to be so high if you was investing. Yeah. But when we're trading, we want to take advantage of these waves, these movements. And, there's a lot of traders that like to short the market. They say that the market takes the stairs up and it takes the window down. Yeah, that's the saying. That's why you hear a lot of people say, yeah, I just short markets. I like to short markets. I like to go short and I like to sell. Because typically, the selling happens a lot quicker than the buying, than the bullish action. Bearish action typically moves a bit quicker. All right? Now, it doesn't mean you have to do one over the other. It just has an understanding that sometimes, let's say, for example, right now, we've got 8 minutes for this news to hit. And look, let me show you something as well. Even little things that I've seen in my experience. The fact that I took this trade here and the market is just being dilly-dallying. This is another red flag for me. And the market came down here, started pushing down here, came back up here, closed the imbalance. Now it came back over here and it's doing a dilly-dally. If I wanted to, I could close the trade out now. My trade, I'm like, I don't know. I'm about $10 in minus, because my position's so small, because I got in somewhere above where the price is, or close to where the price is. That's probably my spread, a little bit of spread. Yeah. I could close out now, because I'm aware that in 9 minutes, there's a possibility madness is happening in the markets. This is me being aware. Some people are taking trades. They're not even aware that all of this news is going to hit in 7 minutes. And then when they go, oh my gosh, what happened? I just got stopped out. Well, what happened is you wasn't aware that there was news coming. Personally, I'm in so small and my stop is such a far distance away. I don't really care. So I'll leave it. I'll leave my position. All right? I'll leave my position. But let's imagine that I was in good profits right now. I would protect myself. As I mentioned, I would protect my trade. All right? Let's have a look at the Dixie. See what the Dixie's doing. Remember, the Dixie's driving everything. Dixie's still pushing up, boy. Gaining some strength. Look where this morning I had this little guy in here. And since then, the Dixie's been pushing up. All right? Now, I'm not trading the Dixie, the dollar by itself, but I'm using the Dixie to trade the EU and GU. Hence the reason why I've been telling you all morning I've been selling it. Yeah? As this pushes up. So the question you got to ask myself is, where might this go? Well, the first place things that I start doing is start identifying significant points of interest. One significant point of interest that I always identify, just as rule of thumb, is 50%, especially because I trade London, off the Asian session. So I'm thinking to myself that if this dollar gets here, that would be a first milestone for me. Someone else might call it a TP. That means if I'm in EU for the sell, yeah, have a look at my little position. That's dilly-dallying. Now it's back in the blue, just mucking about. But when that dollar gets to that 50% area, I might be expecting to see this market start coming back on me. Even if it wants to continue going down, I'm expecting some sort of reaction because I understand the dollar drives my EU and my GU and everything else in the major pairs if you really wanted to go there. All right. Let's have a look. We've got 5 minutes left of the market. It's quite good for us to see this now, to see the news. All right. Because the same way I'm hyping the news, nothing might happen. Okay. The same way I'm saying we can see a lot of volatility come in the market, nothing significant might happen. Maybe the market might see all of these things play out, but they're really waiting for the ECB Guindo speech at 9:30. Maybe they're waiting for the inflation rate at 10. Maybe they're waiting for inflation rate coming out of Germany at 1 o'clock. So this here might just be an anticlimax and nothing happens. And then all of a sudden at 10 o'clock, you lot see huge volatility. I don't know. I wish I could tell you I know which one is going to happen. Maybe if I did the math, maybe there's a way that we can work it out. I could probably go back historically, plot all these events, and we can look, because it's easy to do. It's just whether you're willing to do it. I can go in here and I can plot all of these events, plot today's date, plot when all these news, and I can go and look at here historically and see the effect on the markets on this date, May the 3rd, April the 3rd. And I could go and I could do that. If I was a nerd and I could go and do that, and maybe then I could turn around and say to you guys, actually, you're not going to see any reaction in the next 3 minutes. You're going to see the reaction at 9:30, because historically, even though all these news hit at 9, nothing happens till 9:30 historically. But I don't know that because I haven't done the work. But if I wanted to, those guys with the corduroy suits in the heat, white socks, shoes with Velcro, and massively thick glasses that work for these companies, they've done that math. They've done that math and carried the last one. And they know that nothing ain't happening until 10 o'clock. You could do it as well. There's levels to it, right? There's levels to everything. Yeah. Have a look at our little jab. It's going in the right direction at the moment. I'm in the blue, you know, not quite $100 dancing backwards and forwards. I don't care. Yeah. Yeah. I'm in it. Let's have a look at G. Let's have a look and see what his cousin's doing real quick. We've got 2 minutes before the news comes out. So we're looking at the cousins. I'm still concerned. Look at this. I'm still concerned on the 15-minute time frame by this bullish divergence that I identified. Just look at it on a 5-minute time frame. Still concerned because we haven't really broken any significant structure as well, even though we're getting a little push. I'm still concerned. This little structure underneath here hasn't been broken. Okay. So like I said to you right now, guys, even though that little jab's in the blue, I'm still very concerned. All right. I'm concerned to see what's going to happen in the next 1 minute, 2 minutes and 10 seconds. All right. And where my concern is with EU is the market flying all the way up here. And let's look at GU. And let's see if we can see a point of interest on GU that I'm concerned about. You can see I've put some lines in here previously. Look, this has moved, this box. I accidentally must have dragged it down. Let me unlock it, put it where it's supposed to be. Supposed to be kind of like this. It's not the greatest of boxes. To be fair, the box really should have been about here. We saw some manipulation. We've seen a distribution up to about 50% of this range. We've seen a reaction from here that's broken some minor structure here, half an hour structure here. You know, I'm concerned. We've got this imbalance in here also. I'm concerned we might get some bullish energy coming into this market. Let's see, we've got a minute left, 1 minute and 5 seconds. Let's see if we get real volatility that comes in that market and goes against us, okay? Or whether or not we're going to get that market pushing our direction. On a 1 hour time frame, we're getting a huge manipulation M, and that right shoulder took Asian session liquidity. That means that in 40 seconds, this is all in balance. All right, so now I've seen this. I'm quite concerned by this push up in here for how many pips? For at least 20 pips against us. All right, so my EU, we may see a 20 pip push in the wrong direction. It won't affect me because my stop is above the highs. But we might see even more volatile than that. And either way, it doesn't even matter. My stop isn't, I'm moving my stop down. All right, let's see. 5 seconds for the news to hit. Let's see if we get a level of volatility hit this market. I'm gonna put some alerts in so we can hear straight away if we start hearing alerts just ringing like crazy. We've got an initial push down. We've got an initial little bit of volatility. See the push? That's the 9 o'clock push. And that's going in our direction at the moment. So I'm not getting excited. Okay. I'm staying calm. We've actually had pushing down here in our direction. So that little jab, if anyone else took the jab with me, they're in a little bit of blue at the moment. And what I would probably advise, which I'm going to do, I'm going to do it out of practice, yeah? And what I've been saying to you, I'm going to protect myself. All right? So out of practice, what I've just done now is I've done this. Not because I really want to do it, because I'm so small, but it's for you at home, understanding how I'm protecting myself. So now I'm in that trade for the soul, no risk. So if now, because of all of this, have a look, all of this stuff that's still loading, all this news here that's coming out, that market goes mad and pushes in the wrong direction, which I've got my concern about anyway, I don't lose any money. It's win-win for me at the moment. Yeah. Now, yes, I'm not giving my trade a lot of space to breathe. Yeah. But I am protective. Remember, it's always about what I'm willing to lose. So like because I'm teaching, I've made the decision that I'll make it risk-free. If you got in a trade right now with me on that jab, your trade could be risk-free now. Now you haven't made any money. And if it kicks back up in here, you're not going to make any money, but you're not going to lose any money. All right. This is me moving my stop early. I don't normally want you guys to move your stop so early. I want you to take the risk and just sit on it. But the only reason why I'm doing that is because this throws a spanner in our works to technical analysis. Look, still loading. They don't know. This is still going on. This Saxony CPI, I don't even know what that is going on. Boom, boom, boom. Brandenburg is still thinking about it. Blah, blah, blah. Like, we don't know. All right. So that is trading, me protecting myself. And though the market's moving in my direction, I don't get excited. Those other guys on Instagram, they're, I told you so, look at everything, blah, blah, blah. We're in the blue. Blue, blue, blue. Everyone put blue in the chat box. Get out of it. Talking about like I'm a mug. Stop mugging me. Yeah, let's talk business. Let's be grown-ups. Yeah, I want you guys to understand and learn of why we're at a one-to-one. We're at a one-to-one. Those other guys are going, everyone take your TP right now. This is a one-to-one. Boom, 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 and they're trying to say this is a win. All right, cool. Maybe it is for you. I get it. I'm happy for you. Not with us. Yeah. We understand trading. I'm protected myself here. I'm in the trade. I'm in it to win it. Depending on how much money that you've risked, which nobody here should be risking more than 1%, I am not going to be telling you to take one-to-one trades. I'm sorry. All right? Because a one-to-one trade means that you might win one, might lose one, might win one. You're not doing anything. You're making no progress. And bearing in mind, you more than likely lose more trades than you win. You have to be in trades and at least be seeking out a 1 to 3 trade. All right. So for argument's sake, this is going to be 1 to 2 if we take Asian session lows. And if we move anywhere down towards New York session lows, you know, we're talking about a 1 to 4, 1 to 5 trade. Yeah. If this trade doesn't kick back on us and stop me out from where I've protected myself, I'm in this trade at least to the, I'm going to put some TPs in so people are going to ask where the TP's at. Well, here would be one TP, which I'm going to make bright blue. That would be one TP. Where is it? Let me go again. That would be one TP over here. It is Monday, so we have to be, sensitive to the fact that Monday's got some volatility. Another TP is going to be, let's have a look. Another TP is going to be here. Another TP is going to be here. I see TP, I mean take profit, point of interest, is going to be here. 50% of that range, which happens to be just below this consolidation. All right, it's going to be here. And if this market, it's more than likely not going to happen today, but then again, who knows? Okay, we are getting the market kicking back on us right now, coming towards trying to stop me out for nothing. Doesn't mean anything to me. I've protected myself, is what it is. Worst case scenario is that's going to stop me out for nothing. I'm going to have to get back in, okay? But I've protected myself just because I don't trust the news, all right? But best case scenario, if this market really starts going, is it getting down and getting out of this box that I've drawn in here, all right? And then it does take this box, then I'm expecting to see some sort of reaction, all right? But it's not going to happen today. This market doesn't move that much, yeah? How? We can see in the daily, well, I can't say that market doesn't move that much. It does, it can do, yeah? But here, if you see, look, daily candles, yeah, you can see on average, what size of candles there are. On average, this market has some little medium chicken nuggets, yeah? Doesn't have not necessarily big, massive daily candles. Now, we can find out the average daily range of a market by Googling it. So, on average, if EU on average moves 50 pips, just say for example, just because you decided to take a trade today, it's not going to move 400 pips. Yeah? So therefore, you can set your targets, especially if you're not planning on staying in the trade for days, based upon average range. So if you see that you've got 50 pips out of a trade, you're like, rah, that's above average. Let me make sure I take my profits here. Because typically this market doesn't just keep running in the same direction for more than 50 pips, if that was the average range. Okay, we've seen the market break structure here. Currently, the market's pushed back and tapped into a previous battlefield right here. I'm hoping to keep that trade alive. Right now, this minute, this market is going to turn around. Yeah, here's the previous battlefield. Have a look. Market couldn't break here. Market couldn't break here. Market had to think about it and broke through here with strength and speed. I'm hoping that market continues getting down to our first TP. But even though I'm in absolutely no risk, and that is why, as an aggressive trader, if this market now either here shows me in manipulation M and break structure, which is too small, it's not going to. But if this market comes and closes down below here, I will be scaling in. Why would I be scaling in? Because I've got no risk on the table at the moment. I'm not going to scale in and take more risk because this trade's risk-free. This first one that was from over here, yeah, is currently risk-free. I've got no risk on the table. Yeah. So if I'm correct now by my analysis, which it's looking that way at the moment, but who knows? Still could turn around and do a madness and go, take a doo-doo up here. All right. But if it does, I can scale in. And when I scale in, then I will have some risk on the table, but it's my choice. I could have 0.5% risk. I can have 0.25% risk. I can have 1% risk if I wanted to. Yeah. And with that risk, I can hedge with the profits I'm in from this trade. Meaning that even if this trade starts going badly, I can flatten both positions before I take any type of loss. Because this position, position number one, is in profits. Understand what I just said to you guys. I said something that is higher level. Yeah? Slightly getting a bit more advanced. Sometimes I take trades like this. I'm going to show you on a plain screen. We're going to finish up like this, all right? Sometimes I take trades like this. Sometimes, most of the time. If I take a trade and the market's bearish overall, all right? So let's put some lines in like this. Overall, the market's doing that. It's going down in this range. Okay. And the market within that has been, doing what it's doing, coming up here, and then doing what it's doing, and coming up here, and doing what it's doing, and coming up here. All right. Now, when I got into this trade here, because the market took liquidity, made a lovely manipulation M, tapped in, and did this. All right. When I got in this trade here, and this trade started to become profitable. Yeah, I got into this trade here. Whether I took it aggressively above the last high or above the highest high, doesn't matter. Let's just say I took it here. It's really profitable trade. It's going. All right. This trade starts to go. Maybe there was some news, maybe there's some other reasons, but it starts to have a nice little push in here and New York opens. All right. When I take this next trade, because I scale in, this first trade is already $200 up. All right. It's $200 up. My initial risk on it, for argument's sake, was, I don't know, $50. So I'm at 1 to 4 or here. Or let me just say, so I don't know, doesn't matter, $100. Who cares? I'm at 1 to 2 here. Let's imagine I'm scaling, risking $50 or risking $100. Really doesn't matter. But let's just use $50 as an example. Even if this trade starts to come back on me, so my $50 now that I'm risking is that as soon as I open the trade here, I opened another trade here. As soon as I opened the trade started going against me. Okay? Because it's just sod's law. The trade started going against me here. Now, this trade is now minus 10, and my $200 is 190. Yeah, I'm still 190 up. I'm still 180 up. I'm still the point I'm making to you is even if I took this trade here and I risked $100, and as soon as I click the button, it started going back on me. It's £80 down. I'm £90 now down. I'm £90 down on the second position, but on this first position, I'm going to still be £110 up. I'm wrong, sorry. This is £90 down, 100. This is going backwards, £90. I'm still up about 50 quid. Yeah. So I'm essentially hedging. So if I wanted to, I could just watch my P&L, which is my profit and loss. And when that number got down to a number I don't like, for example, minus 50 quid, I could just flatten my positions. I could say, I'm not willing to take any more loss than that. I was up 200 quid. I opened up a second position. I placed that stop above the swing highs or wherever it is. And I'm not happy about it because once I'm dipping into the profits of this one when this one goes backwards. So don't get twisted. I don't want that to happen. But even if it did happen, I can still protect myself because I'm not willing to lose more than X amount of money. And I could keep doing that if I wanted to with positions. Yeah. Because this first position is in this much profits. This second position is this much profits and risk-free. This third position is in a little profits and risk-free. But this new position I opened is not risk-free. And then all of a sudden now the markets start to go back on me. As they go back on me, this starts to go down to zero. This starts to go down to zero. But my overall P&L, let's imagine it was 1,000 quid when I was down here. Overall, I'm just looking at that number because I have made a decision that I'm not leaving this market with less than 500 quid. So if I see this market, I can just flatten my positions at 500 quid. Now I'm pissed that I had 1, 2, 3 positions in that could have potentially run for 2 grand. And I ended up taking 500 quid. But let me tell you something for free. 500 quid is 500 quid. At the end of the week, when you look back and you say, yeah, I made 500 quid on Monday, it's all going to add up. But the point what I'm showing you is trade management. This is something you're not going to get from a man who gives you signals, for example. Hey, guys, get in at 1.275 and, put your stop loss out here. What are you talking about? Anyone can do that. I could have said this morning, the same time when we woke up and I didn't say a word, and I put this here question mark in here, I could say, dollar's going to gain strength from here, 9.6, 550. And I could have just put some arbitrary risk number. Let's just say, 50 pips here. Yeah. And therefore, guys, we're selling GU and that. Who cares about that? Where's the trade management? Where's the risk management? Where's the acknowledgement of the news? Where are all those things? Have a look. This is our jab. This is still our jab coming down here. Look, GU, EU. Where's EU? Let's go to refresh it. This is still our jab. Yeah. This is live. And this isn't live me just saying it because I say so. Everyone be looking to sell GU because I say so. No, But look at this so GU because I'm giving you these reasons for it for you to make up your own decisions. Do you think it makes sense? If you think it makes sense, a big part of trading is also your own convictions. Can you back yourself? A big trade of business, can you back yourself? If you're a sportsman and there's a one-on-one and the ball's, 50% between you, 50% between the defender, can you back yourself? Are you going to back out of a challenge last minute? Because the guy who backs out of the challenge last minute breaks his leg. The guy who goes in there, he comes out with a ball. Can you back yourself? I backed myself here, even though I had my concerns, and now we are down here. That's a big part of trading. Can you pull the trigger? Or are you too shook? I told everybody in here, everyone in here that's been in this strategy should have a funded account. I don't care. Even if it's a small account, you should have one. Because you're only learning one part of trading at the moment, which is fairy tale land. Nothing's real. When you put your money up, it doesn't even matter if it's 50 quid. It's real money. My 250 quid account that I told you guys I'm taking 250 pounds to £1 million. I'm going to let you know right now, if I close that account right now and say, let me just take the 4 grand that is at, it's an achievement. It's me taking, it's real money. It's real money. I can go and buy myself a big chain if that's what I wanted to do. But there is a different emotions to knowing that than it's just a demo account or it's a prop firm account. I'm not going to make any money anyway until I pass a challenge, and then I'm not going to make, it's a different emotion, and there is levels. So then we're talking about there's levels to all those analysts, yeah, analyzing the information. There's different levels to trading. There's demo traders that kill it, trade on demo and all day long. Like, look at my demo account, man. I've got this, I got that, I did this, I did that. You're like, whoa, killed it. Yeah, it's a demo at the moment, but okay, at that point in time, it's a demo at the moment. Doesn't mean anything. Like, if you want to get become a real trader and get funded, get like investment, or join an actual proper proprietary trading firm, okay, they want to see at least 12 months of live trading data. At least. Not demo data, live trading data. So that means you took £1,000 of the 12 months, you traded it, and now it's £5,000, and you've traded it very safely, and you can see got a nice equity curve. For those of you who don't know what equity curve is, it's like this. Your equity, as in you started off here with your £1,000. This is supposed to be 1,000, believe it or not. Let me get rid of this highlighter, it's too thick. Here. This is supposed to be £1,000 here that you started at. And your equity curve, they want to see it looking like this. This is a nice equity curve. This is me looking at someone going, okay, you've got a strategy, and over time, you gradually grew your £1,000, and now you're telling me that your £1,000 is £5,000, and you've got a solid strategy, you've got 12 months of data, and someone's going, you know what? I could give this person my money. The only problem with this person here, this is Joe. The only problem with Joe here is he doesn't have enough money, because he took £1,000 to £5,000. What if he had £1 million? With his lovely, safe, straight trading strategy with a nice equity curve, he would have taken my £1 million to £5 million in 12 months. I'm going to tell you something for free. Turning 1 million into 5 million, that's still 4 million profit. You can do a little 4 million quid in 12 months. The only problem with Joe is he doesn't have enough money. So Joe comes to my firm. He says, Jay, listen, man, look at my equity curve. Look what I've been doing for the last 12 months. This is my strategy. I trade liquidity. I trade the London session. And this is what I've been doing. I look at the equity curve. I go, you know what, Joe? Come to the family, bro. I'm going to set you up with our, on our accounts. We're going to give you our compliance officer. We're going to give you all of these tools. And I'm also going to give you £1 million of capital, because I like what you did here. Let me show you another guy. This is another guy. This is his equity code. He took £1,000 and he turned £1,000 into £8,000. Yeah, over here. This is his equity curve. Now, I want to ask you a simple question. Out of Mr. A, Joe, and this is Mr. B, this is Patrick, who are you giving your money to? Joe or Patrick? Who would you prefer to give your hard-earned paper to? Go on, there's no wrong answers. I'm asking. Who would you prefer to give your money to? One guy turned your grand into 8 grand. This is his equity curve. And the other guy turned your grand into 5 grand, and this is his equity curve. Who are you giving your £1 million of your family's money to?
Guy who made 5 grand, but it's a steady equity curve.
Joe. Because Joe looks like he knows what he's doing. Joe's managing his risk. Joe isn't losing a certain amount of money per day. Yeah? This lunatic, at one point, your £1 million was 3 grand over here. At one point, Joe's £1,000 was 500 was 50 pounds. And you're like, rah, what the hell's going on? And for all you know, Joe got lucky over here because he's got the luck of the leprechauns. Or Patrick got lucky over here and somehow managed to catch a lick and hit 8K. I don't want nobody catching a lick with my £1 million. So, sorry, mate, you're not going to make it. I'm not giving you a single penny. But Joe, I like what you're doing. And that's what we're trying to achieve. And the only way we achieve that, because these guys have got no more information than each other, apart from the fact of understanding their strategy, their edge, and managing their risk. Because Joe took all the same trades as Patrick. Yeah. But the difference is Joe managed his risk so that he closed this trade here. No, sorry, I'll take an L here. Close this trade here. Sorry, I'll take an L here. And then when he actually finally hit a 1 to 3 or 1 to 5, boom, his equity curve went up to there. Then he's lost some trades, but he managed his risk. And then he hit again 1 to 6. Okay. He managed his risk. Then before you know it, the year was up and he's like, not too bad, man. I made 500% on my money. Or the month's up, or the 6 months, or however you want to. This is an example. Okay? This is what we're trying to achieve, guys. This is what you can achieve simply by managing your risk, because it's the only thing you have control over. You have no control over what the markets do. This is why I said to you, like, the trade management, the risk management, especially as a day trader, is so important because you have no control over the markets. The only thing I can control, yeah, is how much I'm what I'm not willing to lose or whatever it may be. Like, I can control that. That's in my control. Right now, see that our jab? Have a look at our jab, guys. Our jab's still here, teetering around. Yeah. Our jab was from up here. Our jab was actually like this. Yeah. The only thing I can control right now is what I'm willing to lose, which I even said to you is nothing because I made it risk-free like this. I don't want to lose nothing. I can't control if in a minute, as soon as I finish the call, that happens. And you're like, oh my God, have you seen EU, man? It's gone against us. I mean, yeah. You know what I'm saying? Like, it is what it is, bro. Yeah. But hopefully, because we have an edge, this market taps in here, takes this first level, taps in here, previous battlefield, takes our TP2. And before you know it, I'll put in the group, guys, trade update, EU, run for 1 to 10. Fantastic. And that's trading, guys. Yeah? Any questions before we finish up? It's 20 past 9. We know we finish up now. Any questions about anything? Does anyone want me to quickly, within 2 minutes, look at another
Just
pair?
a quick one, bro. It's a 4-day week this week. There's Thanksgiving, not Thanksgiving, Independence Day's on Friday. So non-farm payroll is not on Friday. It's on Thursday this week. Yeah, beware. Thursday is non-farm payroll.
So thank you for telling us that, because this, for those of you who don't know, that's our resident fundamental specialist. Yeah, I'm just hoping Independence Day in America don't look like this. Yeah, has anyone seen the film? Yeah, because right about now, you know, America and what's been going on, etc. So give us an update. Give us an update, Alan. What's going on with Israel, America, the war? What's the vibes?
Well,
What's the energy about?
well, the situation. I think I put something in the group last night, where America is losing their safe haven. People are not trusting the dollar. That is why the dollar's weakening. Trump's policies obviously has an effect. However, they have got a spending bill that's going through the Senate at the moment, which is really going to make the poor poorer and the rich richer. However, it's going to put trillions of dollars on the deficit. This is what I said you need to watch out for, because I believe the market will sell off when if or when that goes through. He wants it done by this Friday, so this week will be volatile if that goes through. The spending bill. Yes, there's stuff going on, but I think that is the focus. That is the focus. Also, he's probably going to name a Fed chairman before Jay Powell's time. It depends on who he names. If it's the there's two people. Well, there's a number of people in running, but there's two people, Jay Kaskari, and there's a lady, and God, I keep on forgetting her name. She's deputy chair. They're definitely in the running. But the issue is we don't want them to cut interest rates for sake of cutting interest rates. It's all about the data. So these are a couple of things that are going on. But the thing that is most focused is on the spending bill. The spending bill is going to put trillions of dollars on the deficit, and that's going to cause a lot of problems for the market. That means, as I said, I put in my group, if that goes through, I believe the indices will sell off. The dollar's been doing some divergence. The dollar might be weaker as well. So that's a difference. That most likely will happen as well. So these are the things that is the priority for this week. Any questions, anybody?
No, it's interesting about the dollar. Like I said to you, I mean, for me, the dollar is in it's a real discount. And we know that there's these issues that are happening in the US. I personally, I want to see the dollar getting strength because I want GU and EU to come down. Yeah. I want them to just drop off a cliff, GU and EU. But if you're saying that, this people are kind of seeing the safe haven, the dollar, less and less as being that, can we see this strength coming from anywhere else to see this dollar gain some strength?
No, I think that the dollar is going to lose a lot. I mean, it's gone down to 9. It's a 3-year low against the pound. So, no, I believe also July 8th is a tariff day as well. The policies. Jay, I said this before this guy was elected, right? I said this tariff policy is going to be catastrophic for this, and it's causing. It is. They said no, we're getting money. BS. They're getting money. I can't see it happening. Sorry, the doors just rang. Hold on.
No problem. Guys, amazing session. I have recorded the session. I'm going to